The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 3rd of July. My pleasure to be here. I just had a nice show with Tommy Jr. In the last hour, we're discussing a bunch of things. We'll go through a couple in a moment, but let me just give you an update here. The Dow has made a new all-time high. That to me is really important. It does a couple of things. What it does is it says that the weighting within the Dow, and that is two things, WAITING and the WEIGHTING. The weighting in the Dow to see whether or not it independently could push higher to new all-time highs within the context of other areas not doing well. And now we're seeing that that's possible. Number two is the weighting, WEIGHTING. About a year now, time flies, maybe it's more than a year, whatever it is, within the last 18 months. I've made a big deal in my assessment of the Dow that the weighting, that is the different types, groups, sectors of stocks within the Dow 30 has become the most favorable I've seen it to the Dow. Remember I spoke about the Dow in 2000, where in January it made its all-time high. My contention had been we're making a major top. The Dow should lead us and go from the going to the 12,000, even the 17,000. But over a period of 6 months, going into the last three months of 1999 and the first 3 months of 2000, the incredible inflows that went into the NASDAQ produced something so different that money, in fact, flowed out of the core Dow stocks into the top NASDAQ stocks. And that's why we got a major 5% decline eventually in the NASDAQ. Well, now what we're seeing is this same kind of rotation that's taking 5 financials and putting them into the Dow. To me, in my mega outlook for the markets, and I have to admit, I thought the Dow was about to pull back a little deeper, not much more, but a little deeper, because that my thinking was that the NASDAQ took all the indices up, and it's going to be pulling the other indices, took them rotationally to new all-time highs, and now the NASDAQ will drag them down, and the Dow might be the last one to make its low before we start another big move to the upside. However, with 5 financials and the XLE, that's XLF, which is the S&P Financial Select Financial Spider Fund. Let me see, why is it not showing here? Yes, there it is. Almost at a new all-time recovery high, at least the high of March the 1st, that was at 25.30. Is that a daily? Yeah, that's a day. So March the 6th. And that is being tested because we're right now at 25.12 in the XLF in this cup formation. So what we've got here is that because of the rotation with the 5 financials, that's MasterCard, Visa, Goldman Sachs, why am I blanking out? JP Morgan, Wells Fargo. Why we've got these key ingredients, it really is tremendous support on the Dow. Okay, now we can go to the others. The S&P, SPX has not yet made a new all-time high. It's trading at 2437.59, up 14.18. It needs to get to 20, what was that, 24.53? Yeah, 24.53.82 was the high on the 20th of June. And if you look at the QQQ series, not working very well here. Down. The Qs are down. This is a divergent market, and that's the reason why I want you to do this. Now, let me do that. Unfortunately, it's got nothing to do with TradeStation, one of the platforms I use, where I put all my notations. It has to do with me. I did something silly, so I did not get updates to the market from Friday's close. But let me show you something very interesting here. If I go to the Dow, I just drew in this green candlestick, and but what's really important about it is we've now gone to a leg. I believe I have to call it a leg C. That's what I was saying to subscribers over the weekend when I did my 3 time frame Dow study that I do every Saturday and send it off. What I was looking at, I was saying if there is a new all-time high above 21,535. I have to consider it not an F, but probably a new leg C, because that should take the MACD positive finally, because the stochastic was very good at 93%, probably higher right now. So I'm looking at this. So let me see. I believe I have a caller, but I'm looking to see what is going on. Yep, we have Bob in Framingham. Bob, how are you?
Well, I'm very good. Pleasantly surprised. I was about to phone the people at Thinkorswim support and say, what are these funny marks on my charts on soybean, OYB, saying that I actually own some shares. And it turned out that a trade I'd given up on, I'd sent you the charts on it. I was in June, and I'm also in July, soybean calls at 18, and I said, well, this is a loose. Kept doing the premiums, and it turned out, today is nice, but it turned out that back at the June expiration, the value of the underlying just kissed 18, and they signed me. I didn't even know about it. You know, it was one of those little things buried away in my matrix of, what my portfolio holdings were.
Wow,
so
it did 18.11, yes.
So that was nice. What a pleasant surprise. And I
Bob,
yes.
after dropping to 17.43, this is a very pleasant surprise. Nice.
So there is a God after all, in case anyone doubted.
It's the trading God, yeah.
But he certainly every once in a while looks down on us option traders as well. And so far as target on this, I think some interesting things are coming up. One of the things that's coming up, and that's on the second chart I sent you in the email, it actually has the 200-day exponential moving average on it, which is at 1882. So I'm of the mindset, because this thing is moving as much as it has, it's just going to have to go up and kiss the 200-day exponential moving average. And let's see what it's up there.
Could you just tell me, SOYB is in fact the what is it, terrarium, whatever it's called, soybean fund. Oh, it's the fund. That's why I get it. Oh, yes. I'd like to talk about this because there's something very interesting about the chart formation. So can you hold on?
Yes, I can.
Great. We'll be back with Bobby in Framingham. We're looking at SOYB, and it is trading up sharply, and it's at 18.50.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're back and we're looking at SOYB for Bob in Framingham, who got that position. Didn't know he had the position. It dropped quite sharply on Friday, and now it's looking fantastic. And I'm just looking to see what I did during the break when you're using some software that you don't use very often, and then all of a sudden you click something, you never know what's going on. It's trading at $18.50. What I did want to say to you, Bob, is that around about 18.62, and 18.62 is in fact 10 cents above the high that was made back on the 10th of May. Trading at this level, it should in fact touch the 200-period moving average, because the closer you get to a moving average or a gap or some icon, something of great that was of great importance and then fades from being important, as you get closer coming back to it, the 2 Korean soybean fund, I think, is going to try to touch 18.62. That's going to be really important. And then it could chop around a little bit above, a little bit below, but it turns that level into a magnet.
Yes, I see that. And additionally, if we were to dust off Tom O'Brien's old Wyckoff book, I think we may have just jumped the creek.
So jumping the creek now, that's a little difficult to talk about when you're talking about commodities, because they trade 24 hours a day. So sometimes they've already been trading when the market opens, so you'll always find gaps. But what Bobby's talking about, there's like an island reversal. If you look at the candle of the 17th of May with a high of 18.36 and a low of 18.29, there was no trades. They came back to 18.29. They were all well below it. In fact, it even went down to 17.35 on the 26th. And all of a sudden, you get to the point of, on Friday, there was a high of, is that Friday? Yep. Friday is a high of 18.15. and today you gap. So that whole gap, I can't do it right now, but that gap is showing what we call an island reversal, where you go away from the mainland and you have this little piece of land, this little piece of trading property. Sometimes it could be one bar, sometimes it could be a lot. If you gap to the upside, if you stop dead, right, ice will be the trend line, resistance or support. When you gap above it or below it, that's essentially saying that you've leaped the stream. I have to laugh. As I said, leap the stream. Once we were going, when I was back in high school as a teenager, we were going to an athletic meeting, and in order to get to the field, we had to jump over just a tiny little stream, maybe 2.5 feet wide. And I was the athletic captain. So I'm seeing everybody goes across very nicely. Everybody jumps across. And right now, as I was talking about jumping the creek, I remembered I was the only one that got my foot right into the stream. So jumping the stream can be very important. So that's what you've done right now. And the momentum to the upside in this leg B in the daily chart suggests that if there is this pullback and it doesn't take out today's low of 18.31, but instead it makes a higher high in the next 2 sessions, that's very positive action. Hey, nice job. How did you choose this?
Well, I chose it because it was I got into it it's on the charts that I had sent you, but I actually bought in on June 5th.
Oh.
I bought it on June 5th, and then when we came up on options expiration, because I bought both Junes and Julys at 18, when I came in on the June, I said, oh my God, I was looking at the premiums, and the premiums were down in the pennies, so I said, boy, I'm down in money. And I said, boy, the heck with this. That was very disillusioning. Usually I like it when I win in trades rather than don't win in trades.
Uh-huh.
Maybe it's just me. So there it is, and I said, well, the heck with this soybean stuff. And then a few days later, I looked at it and said, wow, it's really dropped off. But I didn't realize that it had actually kissed the $18 strike price, and I got assigned.
Oh.
So that's how it turns out that I have these 3 contracts worth of it. However, I have quite a few more July strike price 18s, and those are doing quite nicely today.
Okay, very good. So in the pattern I'm looking at, you will see that in the let me just check to see what it is. Yeah, in the move to the upside, the green candles of volume have been very positive and have been sustained. I like to see volume sustained if the move is on the upside. I don't like to see these haphazard basically a green bar, then a red bar, and green bar. These are 1, 2, 3, 4, 5, 6. This almost looks like the oil contract. If you look at the USO, it has almost the same pattern, but the SOYB is way stronger because the SOYB, whereas the USO with the oil fund is really not even halfway into the last big down leg. Your soybean not only has taken it out, but it is above all the reason, and that's really what you were looking at. There was a peak A, B, C, D, E in the daily when it turned down on the 10th of May. And now where are we? Trading, not closing, but trading above that high of May. And that's really important because if there is a close above it, it says everyone who's just bought in is in a winning position. Anyone who's been shorting at any point from that May 10th high is in a losing position. And that says
right,
to me,
I'm calling the daily as a peak B at this point.
Right now. A leg, remember leg B, because we haven't made a peak yet.
Yes, it hasn't come back. Okay, up in leg B, clearly. And one thing that I've noticed about commodities that are actual crops, it turns out that the people who trade these things are not idiots. I mean, they don't go stampeding in one direction or the other. There is a real reason that soybeans has moved. It's climate stuff. It's bad forecasts in certain areas. Bugs are eating up soybeans somewhere, and they're saying, I've got a winter here. So rather than it being an island top, I expect it to stay up here and either stay up here or continue to move up because something has happened in the world, and all of the little soybean plants that are scattered throughout that says this is what babies are now worth.
Right, and not only that, it's also weather related, and as you say, in the commodity area, I'm not going to say all the time. I have no clue because it's not what I trade. But my thinking here is that you are talking about farmers. You're talking about people whose livelihood depends on not being extravagant in their moves. They have to really think it through, and they have to make very well thought out take positions. So I believe that you're right. I think that it looks to me like the trend at this particular point is to the upside, and we've got a daily, but it will impact the weekly, not last week, but this week with the candle as it is, it starts to impact this week's weekly candle in the soybeans. So SOYB, hey, very nice, Bob. Thank you so much for calling and letting me know, and have a great 4th.
Okay, one last thing, if I may.
Oh, sure.
Utilizing the Chapman wave is very comforting in things like this. I can say these things are going on, but it's only a leg B. We'll correct that. And if it were something like a leg D, I'd say, whoops, maybe I'm in trouble. It's time to get my finger on the sell button. But at this point, with confidence, I can hang on.
I believe so, and let's hope that's the case. So good luck with the trade. We'll be following it. Thanks for calling, Bob. Have a great week.
Yeah, and you as well. Thank you.
Thank you very much. Folks, we'll be back. Dow is, I can't even find it right now. Dow is up very sharply. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yeah, folks, I just want to correct 2 things. One is I typed into the den, I'm not sure if I said it out loud, there was a question about what time. Ruby wanted to know what time the futures close. Oh, the futures closed today. I thought it was the market. The market closes, I believe it's at 1:30, and therefore the futures should close just about then, or maybe 10 minutes later. Whatever time the market closes, I think the futures will close as well. That's the way it should work. Now, a couple of things. GT just reminded me, when I said 5 financials, I wanted to emphasize that they are the 5 financials. And what we've got is, let's go, American Express, I forgot. I just couldn't remember offhand what the other one was. And it's just been straight up. It's trading at 85.61 right now. It's just been, this is leg A, B, C, D. I think this is E. I think it's leg E. Wait, I've got it right here in my other chart. Let me see. It won't be updated to today. AXP, there it is. AXP is in leg E. So just extended leg E. Lousy candle on Friday. Bam, it just repairs that. And it's trading, it's still in leg E. You've got, I want to talk about the monthly charts. I was asked about that. So this is leg C in the monthly. This is E/B in the weekly for American Express. Remember, you're looking at charts that are Friday's close at this point, right? This is the one that has the current price right here in the black background. Then you get Bank of America used to be in, it's gone. General Electric used to be a financial, it's not a financial anymore. But, and WFC, I was just struggling, it wasn't AXP. I said Wells Fargo, of course, is not in the Dow, it's American Express. So the other is, Goldman Sachs is closer to an actual pure financial, and Goldman Sachs right now, if I can just get it right here, you'll see. So Goldman Sachs is trading at 228.26, close to making a new leg up, but way lower than its all-time high in the 255 area. So it has plenty of room to go. If you're looking at the charts themselves, based on my technique, Goldman Sachs right now is in leg, extended leg C in the daily. It is just in leg, very interesting, 94 is 2, okay, still in leg, gray leg A in the weekly, and this is the chart formation that I'd be looking at. Is it going to make a cup formation? Is this a brand new move to the upside that's going to last? We'll know. I'll do, as soon as I get all my charts back updated, I'll be able to do that. But in the meantime, it's only a leg A in the monthly of Goldman Sachs. I think it's going to go above the 255.15 high of March at some time this year. So looking out, but shorter term, I just need to see that it holds 220 over the next 3 to 5 trading days. If you're looking at the next one, you've got American Express, then you've got MasterCard. So we're talking about financials. We're not talking about banks. These are not bank stocks. Yep, there it is. And there's the trend line that it needs to break above. So it was trading at 121.45 on Friday after trying to rally, and then it closed at the lows. Let's see where it is now. MasterCard, MA, trading at 121.42, down 3 cents, just down a little bit. Oh, that's interesting. So that's struggling. And you've got Visa, V. And Visa is also not doing all that much stuff, 27 cents. But look at both of them. In my daily charts, oops, no, right here. In my charts that I wanted to show, MasterCard is right here. Visa is in leg C. It needs to get above 96.60 to really initiate an uptrend confirmation. And the weekly chart would go to a leg E. Monthly chart is in leg E. So these are not updated. Remember, this is Friday's close. I just wanted to say that looking out, the financials, I think, is the area that is going to be the most beneficial to the Dow. This is the way I'm looking at it at this particular point. Canon, ExxonMobil trading at, oops, let me see what it's trading at right now. ExxonMobil, XOM trading at up $1.46 at 82.19. ExxonMobil and CVX, which is Chevron, in the Dow, those are the two multinational oils, integrated oil, I believe they're called. Can they be so influential? And I'm thinking that it could finally turn out to be that they give some stability and that you get the financials really giving a kicker. If you look at UNH trading very nicely today, up 2, UNH is in the Dow now, and that makes a big difference. I'm looking at it here, UNH. It had a bit of a pullback into last week for 3 days, and now it is at, what did I say the price was? UNH trading at 187.43. 187.43 puts it way above the high of 183.76 on the 8th. This is good action. Recycles the weekly chart and extends leg D in the monthly chart. So let me put this, try to package it. There are just enough stocks within the Dow that could really benefit to push, to give support to the Dow on any big weakness if it's coming in the next couple of weeks, but at the same time to give impetus to the upside, number one. Number two, when you're looking at the QQQ series, that's not good. We've got a sell mode in the weekly chart of the QQQ series. Same in the SMA. That's not updated, remember, but it is not that much higher at this point. And the same thing in the SMHs. Sell modes, and that's an XLK. And that's going to be very important. A report I just read a few moments ago says Microsoft is preparing to lay off thousands of employees according to this report. So XLK struggling. Microsoft, when I looked at it over the weekend, I'm saying to myself, hey, that's that same pattern. Strong down move, a bounce, should be a 1-to-1 to the downside at some point. This is not updated. I've got it at 68.96 on Friday. And today Microsoft is trading at MSFT, trading at, down 33 to 68.60. So it's struggling. And that's the reason why I'm saying rotational. Keep in mind, a rotational correction maintains support in the overall market picture. Now, the reason why I was saying to subscribers, so far we're not looking at even short-term bear market material, bearish, but not bear market material, is that those futures should have been down double digits in the morning, try to rally during the day, then fail or make a lower low, and then close near the lows at the end of the day, and then repeat the process 3 out of the five days of the week. And that's just not happening. We're seeing big moves to the upside. In fact, such a big move that the diamonds have gone to an all-time high. The SPY is struggling. Up 1.27, up 0.53%. The diamonds are up 1.97. I'm sorry, diamonds are up 0.92%, almost 1%. That's big stuff. Doesn't happen very often. So thank you, GT, for that update. Question about Apple, and this is going to be fascinating. See, Apple is down 18 cents. And let me show you something in my charts here. We want to be looking at the monthly charts. Monthly charts suggesting this is just a B in the monthly chart of Apple, but it is a D in the weekly, and it's poor action. MACD is stochastic of poor. The daily looks terrible. And then I can repeat in most of the really big cap stocks, tech stocks, that is. Basil Chapman, Tiger Technicians Hour. Let me give you an update. Dow is up 197.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Oh, so a couple of things here. Looking at Intel, on Friday, Friday, Intel was weak. It closed at 33.75. At this particular point with the market up almost 200 points, Intel is, why is it taking time? Intel is down 15 cents. It's just not showing strength. And you can go through all of these. Cisco right now is trading up 28 cents. Look at the chart here on my my daily, weekly, monthly triple chart pattern here. Cisco is trading right there. It is 31.43. So this is peak A, B, C. Goes to a D. What do we look for in the Chapman wave? We're always looking for Ds. That's where you can get your greatest time out or price movement to the downside. And there it is. It's not yet the biggest move down, but it is saying that it's a D that you got to respect. And the weekly chart's just terrible. And you can go through these tech stocks like that. Now, good point was made by GT. We're having this online conversation, and that is that the Dow has become tech heavy with Apple, Intel, Cisco, Microsoft, IBM. He's got Visa. I'm going to put him more in the financial area. So, yes, I don't disagree at all. But what I am saying is that the strength of the financials later on, I think that's going to be the trigger for the breakout to the upside. That's really what I wanted to say. Now, I can't remember if I discussed this during the show I did with Tommy earlier on, the Nadex platform show. But I did discuss, we were talking about Tesla, and I said, General Motors it's acting very well. How come it's acting well? What's going on there? And right now, you can see this move. I focused this over the weekend and did a whole thing on it. We just missed buying it on Friday. Let me double check here. The low was, 34.77. What a pity. Just by 20 cents or something. I wanted it. Why? Because this is a great, I don't care whether I've got an assessment that GM, something's wrong and all that with that whole auto industry. It looked like a nice chart. And what is it doing today? GM is in fact trading up strongly. It's at 35.90, up 97 cents. Very good. Very nice action. Look at the left side. It's like an inverted head and shoulders and it's breaking out. Very nice. Congratulations, General Motors. And I just wanted to point out, Ford is having a nice candle up 42 cents. So what's going on? And that's part of the rotational thing. And what I discussed with Tommy, and I'm not sure if I'm accurate or not. It's just this is my thinking, having been in the market for so many decades, that fund managers over the last week have kind of pulled out some cash, but they're also saying, you know what, for a short-term summer trade, I want to look at areas that have been very weak. I want to get into stuff that has more upside potential than downside. I want to go into areas that are just nobody wants to own. And I think this is the area. I think we're looking at it right now. The IBB has already had a good move. It's trading at 311.45. But if you look at my chart pattern right here for IBB, that's the NASDAQ biotech sector, it really suggests it should have done it Friday, and it should definitely have done it today. And that was take out the high of both the 29th and the 28th. So the 31706, 31760. It has to get to 318.50s, 8 points higher, 9 points higher. And that's going to be that. Then I would say, you know what? It'll break into a leg D in the daily, and it'll form an extension leg D in the weekly. But so far, all it looks like is just kind of a bounce that's not really garnering the kind of strength you want to see. Yeah, right here. Look, it's not good. Okay. So those are the things I wanted to look at. And then a couple of questions about EEM. Funny, I was looking at EEM a little earlier on, and I discussed it with Tommy, and I said, look, there's been basically a 2-month consolidation sideways, really like an oval formation. And what's needed is to get to the 4270s, 4280s, and right now it's trading at 4176. Not a big deal. It should be able to get there, but it's really stuck in the range. So it's not leading, it's following at this particular point. So the question is, the wave count. Well, the wave count right now says A, B, C, D, brand new A, B. That if it closes above 42.04, the high of the 9th, closes, that'll be very positive. All right. Next question is EWZ. EWZ, that's Brazil, right? Brazil. Oh, look at that. Up 19 cents at 34.33. This is not as strong as, say, the crude oil chart, but it is good, and it says it's going to try to tackle the 34.91 area, which is the 200-period moving average. It's at 34.33. Yeah, it's working high. It's way higher. It's not strong. It's just working its way higher. A question I had before was about OIH. Nice candle. And if this candle closes above the high of the 19th at 25.67, and right now the high is 25.67, so the high is 25.75. Good. So if it closes above the high of the, what did I say that was, the 19th? Yeah, the 19th. That'll suggest that these 3 candle tops right here with a high of 26.61 from the 13th of June, that would be a target. So yes, it's acting very well. This is the Van Eck Vectors oil service sector. Okay. Now, I wanted to show the TLT. I don't think I've done anything with it just yet. Whoa, look at that. That was a huge rally in bonds from the 119s to the 128s, and now it's trading at 124, giving back a chunk. Testing the 9-period moving and the 200-period moving average. This is the cyan-colored one right here. This is what I'm looking at. If I go to my charts, not updated, remember this is Friday's close, and now it's below in the 124 area. That 200-period moving average was support, was resistance, then became support. Now it's acting as support, which has been pierced. So 124.36 is going to be really important. A decisive close, not just today, but on Wednesday below, says, nah, that weekly chart was strong, now it's starting to weaken. But if there's a bounce at any point and bonds rally to the 125.40s between now and Thursday, that means that yields will be going to a trading band. Lower lows and lower highs, but within a really reasonable trading band. So that's really what I'm looking at. We were long, we took profits in the TLT. Now we've got to monitor it closely. Why? Because this is not updated. Yields are higher now. This candle, as I showed my subscribers over the weekend to my opening call, big candle, but it's how the candle handles the resistance downtrend lines. So for the 10-year, which most people look at, trading at, let me go to it now. Can I go to it? TNX, I'm just going to put in TNX and see what it comes up with over here. TNX, TNX. No. I'll try to figure out during the break if I can get the 10-year yields because I want to look at it a little differently. Oh, TNX. I'll be right back. Basil Chapman, Target Technicians Hour. Dow is up very sharply, up 195. The TNX is at 442. We'll talk about it.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
There were a couple of questions. The market closes early today, and I had some really important questions. One is, Basil, I am short the Dow. Should I close the position? So, and then a very quick follow-up question. Kevin asks, where is it? Dow versus NAS and S&P. Basil, so is the divergence between the Dow and the other indices a bear or a bull sign in the short term? Thanks. Well, the way I have to define it is that if you're looking at cycles, you can often get cycles that come in a rotational basis. So what I'm really looking at here is the fact that the Dow went to a new high, and so far the S&P really is quite a bit under the previous high. The IWM, if I can just do this real quickly, IWM is acting well. It could, in fact, get to a new high. Let me just do it over here, IWM. And it's trading at, what did I say here? I didn't give a number. 142.27, so we're at this level right here, 142.27. And the high is 142.90. So this is what I'm looking at. That the consolidate, if you think about it, the Dow has been in consolidation since March the 1st. It did break to the upside, but it's still within what I would call the consolidation phase. The NASDAQ went to new highs. Now, the NASDAQ and the semiconductors seem to need more time, and the XLK. Does it free the Dow to be independent and move much, much higher? I don't think so. I think the Dow has a bit of a cap on the shorter term, and that S&P is telling me that that's probably the case. So to answer the question, if you're a little bit nervous about going into Wednesday as a follow-through into maybe Thursday and higher, much higher highs, take something off if you're short the Dow and you're a little nervous. I wouldn't take it all. I'd take something off. In other words, take half your position off, keep the other half. That's the way I'm thinking of it right now. And then don't give it that much more. In other words, the Dow, INDU. Yeah, so there's a trend line coming in, and it's about at 21,623. That's higher. That's for sure. So I'm just going to say I would, for my subscribers, we are short the Dow, and we haven't had the stop hit yet. I'm going to keep that stop. I'm just saying I worked out that's the stop. That's the stop that it is. Okay. So I'm going to answer the question by saying I think that the drag from the week indices for another week or maybe a little more is going to continue to be a drag, and it's going to put a little bit of an upside cap on the Dow and the S&P. What this is saying to me, and I think this is going to be really important going into the middle of July, is that if the semiconductors finally find some support, they haven't found it yet, but if they find some support, that will allow the Dow to go a little higher. So, sum it up, if you're short, I take something off now if you want, but put a stop in and just be strict about it, because you wouldn't be losing that much. It's not a big percentage that has gone against you, but be strict about it. You can always reshort. We have to see where the close day, early day, and I want to see at 1 o'clock on Wednesday, first real trading of the week. Has the Dow followed with a plus 60, the S&P catching up with now a plus 8, or is there a divergence where there's no follow through, and the volatility index VIX.X, let me put that in right. Oh, it's not updated. Let me just go to this one here. VIX, do I have time? Yep, VIX index, there it is. VIX right now trading at 10.40. If the VIX starts to trade in the 9s, be real careful. The market is going to go higher. I'm just making it a simple plot. Under 10, market goes higher, and it will probably this time include a little bit of a bounce in the semiconductor, etc. But if the VIX stays in the 10s, and on Wednesday, at this time on Wednesday, if the Dow is down, the S&P is down, I think that we've had the bounce and that it should start to retrace, and the consolidation will continue. I hope that helps you. Stay tuned for great. Oh, we've got one more show.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.